Welcome, real estate fans, to another episode of Seattle Real Estate Podcast. I'm Dan Edwards, your host with the Eastside Real Estate Team and the Seattle Real Estate Team, providing you the inside scoop on living, working, and playing across the greater Seattle area, including the Eastside. It is Wednesday, March 20th, 2024, and we're coming to you live Facebook, YouTube, and Instagram. So I'm glad you're here. This is going to be a great show. We've got some great content, great conversation. You're welcome to like or subscribe. You can see if you're on YouTube, there's a there. Also, I'll see your comments too. So if you have any comments, questions, or thoughts, send them over. We'll try and address them in real time. Today's topic is, we've got several really good topics that I think that you will find interesting and engaging. And we, let's see. So we're going to have myself with a Real Talk segment. We're going to be talking about the NAR settlement. Then we're going to talk about assumable loans. This is my favorite topic. Fool's gold, or is it a gold mine? Assumable loans, right? There's a lot of people out there with loans. We're going to talk with our good friend Tucker Maxwell about those assumable loans and what's going on in that world. And then a good friend of mine, Rob Young, with Oasis Senior Advisers, is here to share insights about that transition that many boomers are going through right now and how he can help. So we're going to have a great show. Before we get to that, I am going to welcome our good friend Tucker to the show. Tucker, welcome in. How are you?
I'm great, Dan. How are you today?
I'm doing great. Hey, you said it's a crazy market out there. Tell me a crazy story.
Multiple offers. So just the recent one that's on the top of my head, single family home in Tacoma, Washington, or not even Tacoma, Seward Park. So South King County on the south end of Lake Washington with views. Listed at $850, had clients offer $950 with very little contingencies and a 2-week close, and didn't win.
Did not win. So 100,000 above asking, didn't win. Yeah. There's definitely a lot going on out there with that. Well, hey, everybody in the world, everybody and their brother sent me some kind of poster article about this one. And I thought, there's a rule, and I don't know what this, actually, wait, before we do this, we got to do the cool bumper music. So our Real Talk segment starts now. And I wonder how loud that is, because to me, it's really freaking loud. Is that loud to you?
It's loud on my end as well.
Okay. I might need to adjust the volume down a bit. I'm like, whoa, what's going on? So my buddy sent me this last week, breaking: the National Association of Realtors is eliminating 6% realtor commission. Here's everything you need to know. And then he went on to say a bunch of things that were quite honestly not true. Misleading at best. So here's the, you can definitely chime in on this here, but let me just kind of outline how this kind of went down. And I want to be real careful. Here's the thing: is in my entire career, I have always had my commission be something that is negotiable. I believe in earning the opportunity, and in the lack of value. When you offer a product or service, when it lacks value, then price is the only other consideration. So I always try to provide value. But let me give you some short Washington State history on this, and then I'll tell you where that headline is misleading at the very end. So Washington State in the early 90s created a situation where, prior to the early 90s, let me actually rephrase this. Prior to the 90s, all agents in every real estate transaction were a representative of the seller. The mechanism was not in place for there to be buyer representation. So that entered the scene in the early 90s, where we created this idea of having a representative that owed a level of confidentiality and fiduciary duty to the buyer. And that's when buyer agency was first created in Washington State. So as a whole, though, that started to evolve into the mid to late 2000s, where many people were saying, hey, there's a commission here, and I want to credit back from that commission, says the buyer, and I would like to negotiate that. And so as the market was driving this, the Northwest MLS made some decisions. What they decided to do was decouple the requirement in 2019 to that the seller has to pay a buyer agency commission. So it's a super complicated like situation. But the fact of the matter is this case that came against NAR was accusing the National Association of Realtors of colluding in pricing and artificially keeping home prices high. So that's the premise. And again, I'm not a legal expert. I sell real estate. So I'm going to say that's that is the case as I see it. Now, I want to bring you in on this, Tucker, a little bit, because, from the time being there's money being exchanged, but what is your take on how people have seen this NAR lawsuit or settlement?
Yeah, I think you have to look at it from inside of Washington State and outside of Washington State. I think nationwide, there hasn't been the same level of transparency and commission that we have and we're fortunate to have in Washington. It's always, front and center on a purchase and sale agreement. It's in the NWMLS, which is the local listing service. They've advertised the commission. And so it has been something that buyers and sellers have been aware of. So I feel that we've had some forethought that we need to be transparent in this. We need to have it be a conversation between the professional and the consumer. And so I think we're well ahead of this in Washington State.
Yeah, and I would say early on when this was on the table, the agreements actually were signed with the seller stating that they are going to pay a certain amount of commission, and that the listing brokerage is then going to share that with a buyer broker. And so that was an agreement between the seller and the seller and the brokerage that represents the seller. That's kind of where it ended, and so it created this kind of confusion, if you will, because a buyer is saying, "Well, hey, I'd like you to credit that commission to me," and we're saying, "Well, that agreement is between us and the seller, not between you." And so we adapted. We actually did change in Washington State, and how we changed it is we said, "Okay, great, we're going to move stuff over into your spot, buyer." And we're going to say, you hire a buyer agent and you tell them how much you'd like to pay them. And if the seller is offering a commission to the buyer's agent, credit it against what you agreed to pay them, therefore eliminating a cost for them. So it becomes something that's negotiated. And you're seeing that on contracts, right?
Absolutely. Yeah. And it's something that as a lender, we need to be very much aware of so that we're calculating cash to close correctly. In terms of, does our buyer have to make up any difference in that commission being offered on the terms of the deal?
That's right. Because correct me if I'm wrong on this, but if a lender is looking at that and there's too much cash coming out of a buyer's pocket, it could create a situation where they can't get the loan, right?
Exactly. Yep.
Yeah. Yeah, I think, and I don't want to oversimplify it, but when you see a headline like this, right, it's just saying, okay, National Association of Realtors is eliminating 6% realtor commission. The National Association of Realtors never, ever said to me, and I don't believe, I could be wrong, but I don't believe it was in their charter that there was a 6% commission. So that headline right there, wrong. It's incorrect. What was the caveat in the realtor deal was that they had to offer the seller had to offer a commission to the buyer. So it was the requirement of a cooperating broker commission that was at the crux of it, and really that is what drove it. And I can tell you, I've had 18 years in the business, and nobody has ever told me how much to charge somebody. So that number, and the other thing is the conclusion that it adds is this could lead to a 30% reduction in commissions, driving down home prices across the board. So 30% of a reduction in commission. So that's 1 percentage point. So 1 percentage point is going to drive down home prices. So it's very, it's basically clickbait. It's kind of funny because, what's our biggest problem in the housing market today, Tucker?
Inventory.
And so because of inventory, we have $100,000 above asking. Now, is that because of the agent commission or is that because of the inventory?
It's inventory and, the desirability of the property. I really think it's going to do the opposite. I think it's unfortunately going to probably raise prices because it's really going to come over to our side of the transaction, because now we have for what's really interesting about this is at the same time Biden in his State of the Union talks about home buyer grants and doing these new initiatives to try to give incentives to buyers to help with the major problem for buyers is cash to close, down payment funds. So now we're saying, hey, buyer, on top of these fees and this down payment that you've struggled to come up with traditionally, we now potentially have more fees to add to your plate. And so what's going to end up happening is we're going to start putting this in and we're going to say, hey, okay, buyer, you have to cover this. So offer the seller a higher price so that way we can get closing cost credit and get it back, right? We're just going to move the numbers around to ultimately come to the same conclusion.
Yeah, and the other option a buyer has is to go with somebody who's offering less commission. In my experience, if you're going to hire somebody to do a job, especially one around $500,000 in this area more, don't you want to make sure you have somebody that's really good at what they do? And I have nothing against, somebody figuring out how they want to charge somebody for their product. But, across the board, I can get a cup of coffee at McDonald's, or I can buy a cup of coffee at Woods Coffee. Both are coffee. The experience is different,
Totally.
right? So I think that for agents in the marketplace, it's about knowing your value. I mean, if you were just a buyer's agent who let them pick the house and didn't consult on it and all that stuff, maybe you charge a little less, right? Maybe you do. But if you're somebody that's actively calling neighborhoods in order to bird dog a house for your client, you need to show that value. And I think that there are going to be different types of consumers that decide to work with different people different ways. And it really does come down to, in the absence of value, price is everything. But to have this idea that somehow it's going to impact the housing prices, that's just a joke. It's like a butterfly, wings affecting a hurricane, So all right. Well, so anyways, if you have more questions, if you have thoughts, hey, put them in the comments section. Love to hear everybody's opinion about this. I know that it's not going to change how I do business. It's super important for me, for my clients, to have a 5-star experience. We're always going to make sure we provide the best value for the price. That's how we're going to roll. And as always, my commissions are negotiable. So that's on the record. All right. Well, that concludes our Real Talk segment. Tucker, thanks for your input on that. I really appreciate it. We're going to take a short commercial break. Then we're going to come back with Tucker and we're going to talk about assumable loans. So come back after the short commercial break.
Are you wearing too many hats in your small business? Finding yourself wondering where the time went? Do you ever get frustrated with technology that should just work? Then you need Nerds to Go, America's small business IT department. 425-800-NERD. At Nerds to Go, we provide friendly, professional, and reasonably priced solutions for small business owners. From network troubleshooting to hardware repair or training, let Nerds to Go be your IT department. Call Nerds to Go today. We'll come to you. 425-800-NERD. That's 425-800-NERD.
All right. So welcome back to the show. I am your host, Dan Edwards, with the Seattle and the East Side real estate team. This is Seattle's real estate podcast. I'm here with Tucker Maxwell with Guild Mortgage. Let me get your awesome brand banner up here. It's around here somewhere. There it is. Boom. Guild Mortgage. All right, so let's talk assumable loans, and I'll just frame this conversation is, there have been these assumable loans. They've been there since Fannie Mae and Freddie Mac started putting them out there, and they have a caveat that you can assume somebody's interest rate. So what that means is somebody could go ahead and buy a home and assume the loan that's on it. That's what an assumable loan is. And there are some people that are sitting on homes that need to move that have rates that are better than today's rate, which is a little over 7. So, Tucker, tell me, I kind of blew it. What is an assumable loan? Give me the details.
Yep, you nailed it, Dan. An assumable mortgage is really an arrangement between the current owner and the new buyer to take on the existing loan and its exact terms. So it's just new buyer comes in and says, we'll take that loan. And that sounds like a great deal compared to where the market is at today. And if we can qualify, we'll assume that loan.
Okay. So what are the different, so are conventional loans assumable?
No, typically only FHA and VA loans are assumable at this time.
What about USDA?
That's a good question. We don't see a whole lot of USDA, and I'm guessing they probably are because they fall into that government bucket like FHA and VA. But USDA is a different animal, so I would want to fact check that.
All right, very good. Okay, so what makes a loan eligible for assumption?
Basically, one, it has to be the right type. So first is the type of loan. So not a Fannie Mae or Freddie Mac conventional loan, but a traditional FHA or VA. And really where we see it predominantly is a VA loan. So first off, it's a VA loan that has within the contractual terms of the loan, it specifically says this loan is eligible for an assumption. So easy way to tell. The second is
Wait, you say easy way to tell. What do you have to look at?
Go back to the original loan docs. So the note itself states if the loan is assumable or not.
Okay. So for those of you that are kind of trying to figure out, is my loan assumable, right? Because here's a situation is I want to make sure you have the information, right? Whether or not it's possible or not. You need to go back to your closing packet. And in that giant stack of documents is the original loan documents. Most likely you could also get a copy of that from your servicer.
Absolutely. Yeah.
Okay. All right, cool.
Yep. Or the title and escrow company that closed your transaction, or call your loan officer. They should have access to it as well.
Or your realtor, like me. Yeah. Okay. Everybody should have a copy of it. Okay. So that clause would be first, second, third page. Any idea where it's at?
Oh no. And there's a ton of pages. So buried in the middle somewhere.
But it's usually the loan document, not the promissory note, right?
Correct. Yep. Exactly.
So the loan document would have the interest rate on it and the terms and the amount and all that.
Yep, exactly. We call it a CD, the closing disclosure, but it's in that CD.
Okay, very good. All right, so what are the benefits?
Yeah, so can we back up real quick to like what makes it eligible? Because the second component to it, is not just is the loan eligible for assumption, but the second piece is, does the buyer qualify? And this is where I love your tagline of, is it fool's gold or is it a gold mine? Because here's the tricky part, is the buyer has to qualify. And they have to qualify, but they not only have to just qualify for a loan, but they have to look and feel and have the same risk profile as the original borrower. Because that loan is sitting in a mortgage-backed security somewhere. It's already been sold. It's already been delivered as an investment in a mortgage-backed security, assuming a certain risk profile. So we can't have an original 800 credit score borrower that put 20% down, and then new buyer comes to the table with a 620 credit score, no down payment, and think that that's going to be like for like risk. And that's where I think the fool's gold kind of side comes down to it, is it's really hard to match like for like risk profiles for borrowers. Every application is very different. And so oftentimes the servicer is going to look at it and say, we've already told the end investor what this risk looks like. We can't then swap in a borrower that has very different risk.
Yeah, of course not. No, nobody would do that, because it is now somebody could be less of a risk, right? And that's generally going to be a better way to go. But if it's like neck and neck, it may not be so much. In how many different factors go into somebody's risk profile?
So just to name a few, credit score, down payment, which also could be looked at as loan to value. So how much of the overall value is being borrowed, debt to income ratio, number of borrowers working. So one borrower or a dual income household. Those are like the main factors that present a risk, score.
Okay. What else would make somebody eligible?
The other key component is down payment. So what we have to remember is this existing owner has been making payments and paying down the unpaid balance over time, as the same time as the home has been appreciating in value. And so you may have this gap between, like, let's just say a home is on the market today at 800,000. If they only owe 545,000 on the loan, this new buyer has to make up the difference between 800 and 545,000. And they may not have that amount of funds for down payment. And so now we're thinking, is there a second loan that we can add in there? Maybe a HELOC or a HE loan, or, where do we come up with that? So the down payment question is another hurdle that we have to overcome.
Yeah. Okay. And the reason why this topic came up is Tucker has been helping me, helping a client who is considering a VA, assumable loan. And one of the things that I saw in their documentation is that they would require 5% down. Yep. So it's not just a straight up, I assume this loan and here I go. They still want to have some skin in the game. So let's talk more about the benefits, and then we'll talk about the rest.
Yeah, so the biggest benefit today is interest rate, right? You have a lot of these loans at 2.3, 2.5, 2.7, 3.5, you name it. And so the major advantage is somebody securing a property today at an interest rate that was available many years ago.
Yeah. And there's more to that. It's not just assuming the rate, it's also,
Yeah, the number of payments left. So, shorter term. There's several factors within that are beneficial to assume that loan.
yeah. And so my brother actually has been working on helping a client with an assumable situation. We'll talk about that here in a second, but what are the fool's gold? Where's the pitfalls?
One is, like for like risk. That's the hard part is one, there's not a lot of incentive to a servicer to do this. It doesn't, they're not making any money. It's the same risk. So, or it's the same loan. So one, it just takes some time. They don't have large departments trying to get these things through. So it can take some time. So time is part of it. Fool's gold is if you're trying to move quickly and get into that home and this assumption takes several months, then maybe it's not the right option. Or, if we can't come up with the down payment difference, that's another, fool's gold is they think they can just easily assume it, but coming up with those funds for down payment can be a challenge. But overall, it is doable. I think as an industry, we need to voice our kind of opinion on, they need to make it an easier process.
Yeah.
If we're going to offer this, let's make it something that's more of a gold mine versus a fool's gold.
Yeah. I mean, it's designed obviously for specifically, I'll speak to the VA assumable. I mean, that's something we're offering to our, those that have, stepped forward in our world and put their life on the line for the country. So for me, that process should be so streamlined, it's not even funny. But veterans, there's a lot of bureaucracy that causes problems. So my brother actually was working on a VA loan assumable, and he's been working on it six months.
Yeah.
6 months. Now they finally did get it approved,
Nice.
but everything that you said is true. Back and forth, like pre-approve this, pre-approve that. A couple of, I have to credit my brother's persistence. We're a persistent bunch in my family. So they finally got it through. I took a look this morning. There are 68 homes in the entire Northwest MLS that have advertised assumable loans. So there's an opportunity out there, and but I would caution folks to assume that assumable loan would be an easy process in a market with low inventory. If you're coming in saying we want to assume this loan, the seller may not wait for you. They don't have time to wait for you, and so I would say that pick it carefully. The property might be worth it. But yeah. I mean, we just wanted to present it in that light. Of course, the option. So let's say the assumable, it's a lower interest rate, right? But you're holding off from buying something. I mean, what advice would you give somebody when they run out of options on that assumable? Why should they then move forward, or should they just cancel the transaction?
Well, I mean, we talked about inventory, so if you have a property under contract and you have an opportunity to buy it without it hitting the market and getting into a bidding war or multiple offer situation, it might be the right thing to do to pivot and just buy it with a traditional loan at today's interest rate to secure the property that you want to buy. So I think that's the biggest one. The one thing I want to go back to, Dan, I think what's really important to remember about VA loans and the assumability is when it's a veteran and then another veteran assuming that loan, it's like the win-win scenario, because the veteran that originally had the loan has VA eligibility tied to that loan or their entitlement. And when a veteran, another VA buyer, assumes that loan, it releases their entitlement and puts it on the new buyer. Where it is a struggle is if you have a VA owner trying to let a non-VA buyer assume that loan, their entitlement doesn't get restored.
Ooh, interesting.
And this is where it oftentimes gets hung up, is once the seller finds that out, even though they've maybe advertised it on the NMLS, once they find that out and they say, wait a second, I'm still on the hook for that debt in case that person defaults, and I can't go and use my VA eligibility and entitlement to the full percentage, I may rethink that decision of letting somebody assume it.
Yeah, great. Hey, that's great info. Listen, if you're out there watching this video later, because we're going to make sure we cut this and put this out there for people, you can reach out to Tucker, 425-757-9202. If you, A, want to buy a home that you think is assumable, B, you own a home that you think is assumable, you want to sell, you can also call me. This is good information. And I think navigating through these waters is really the difference of earning tens of thousands of dollars more for your home. So awesome content, Tucker. Thank you for coming on the show. We are going to go to one more commercial break, and then we're going to bring our good friend Rob at Oasis Senior Services. So come back after this short commercial break right there.
You take your car to the shop to check under the hood to make sure everything is working properly. You take your body to your doctor every 6 months for a checkup to ensure you're healthy. You get your teeth cleaned at the dentist often. Okay, well, maybe not often. But what are you doing to make sure your house is staying in tip-top shape? At Key Inspection Services, we value quality, expertise, and education above all else. We inspect all types of homes of any size and age, whether you are buying or selling, or just wanting to learn more about your current home. Our services are designed to be a one-stop shop for all homeowner needs. We offer sewer scopes, air quality testing, mold testing, infrared scans, and more. Whether we are reaching new heights on a roof, traversing the trenches of a crawl space, or having a crappy day scoping your sewer, no pun intended, we strive to give you the best service possible. As the #1 home education and inspection company in the Puget Sound region, our goal is to ensure that you are more knowledgeable about your biggest asset at the end of the day. You can easily book online at www.keyinspectionservices.com or give us a call at 800-748-8766.
All right, welcome back to the show. I am your host, Dan Edwards, managing broker of the Eastside Real Estate Team and the Seattle Real Estate Team. And I am now joined by our good friend, Mr. Rob Young. Welcome, Mr. Young. You're looking so young right now.
I can't help it, Dan. Good to see you. You're looking great.
Thank you. It's been a while. All right, I've got this awesome introduction. Rob runs Puget Sound office of Oasis Senior Advisers, where they help seniors and their families when home is no longer safe. Oasis Senior Advisors specialize in finding the right supportive living situation, whether it's independent living, assisted living, memory care, or adult family homes. So after Rob retired from Boeing, thank goodness, maybe they could use you back to secure those doors a little tighter, Rob. I don't know if that was your role, but that was many years ago. He discerned a calling to serve aging seniors and their families through a stressful journey when they're searching for new housing. Some seniors want to remain independent, and just live in a community with great dining room that takes care of the housekeeping and plans social activities, and others need 24-hour care. Oasis Senior Advisors walk seniors and their families through the journey with a free service to them to help find the right independent living, assisted living, and adult family home or memory care setting for them. Welcome to the show, Rob. It's really good to see you. Like I said, it's good to see you. We've got some awesome questions here. Okay, so your process when you first meet with someone, how long does that take? How far advanced should people be?
Well, so we typically encourage people to be meeting with us maybe 4 to 6 weeks ahead of their need. When they do meet with us, it often takes anywhere from 40 minutes to an hour, sometimes more. But the whole idea is, we can help people if they just need placement within 2 days. Maybe they're at a skilled nursing facility getting discharged and they're being told they can't go home. And in a case like that, we need to find something very quickly, and we do.
Okay.
But in cases where people are being proactive and thinking things, they're working ahead of the need, 4 to 6 weeks is a great amount of time.
4 to 6 weeks. Okay, awesome. So does your phone usually light up after the holidays?
It does, actually. And, sometimes people will come back and say, my gosh, I hadn't realized how much things had changed for mom and dad since we last saw them. And that's when we get kind of an urgent call.
All right. So like the housing process, many people kind of think about hopping on the internet and looking for homes. How should somebody start their search?
Well, they can just call us because, the reality is, just like with homes, there are lots of options out there. We actually have more inventory than you do, Dan, because inventory really isn't a problem for us. So we have the inventory. Okay. But the issue we have is that there's a lot of deception out there. just a couple of weeks ago, I needed to get the phone number for a community that I knew of, right? So I Googled them and I put in the name of the community. And I looked over the first page of results and it's like, nope, that's not them. That's someone else. That's someone else. I had to go to page 7 before I saw their official website. Everything in between there was someone else trying to sell me their thing. Yeah. And some of it's pretty deceptive. They'll have little buttons that say, oh, click here for pricing. And you click and you're suddenly taken into a new website that someone else owns. There's a little button that'll say, by clicking above, you've agreed to our terms of service. And yeah, their terms of service might include that they're going to do a credit check on you. They will own your name forever, which in this state is actually illegal. Anyway, lots of scary things can happen on the internet.
So what you're saying is don't go on the internet. If you have somebody that needs help in this regard, and I've seen it, right? Specifically, if computers for many of our seniors, right, are new. I mean, obviously they're not brand new, but you know what I mean. And you click here, you click there. Next thing you know, you don't know what happened, and a package shows up at your door. So it's much better to have a throat to choke is another way. It's like, Rob, what did you do? You're right there in the flesh. I mean that just as somebody that guides you through. So let's talk about professional help with the process. I think part of it was implied by that, but why else?
Well, there are so many options out there. I mean, just around the Puget Sound, we have hundreds of communities that are licensed for assisted living, and we have thousands of adult family homes that are licensed. In Bellevue alone, there's over 130 licensed adult family homes. These are homes that, for the most part, don't have a sign in front of them. They don't have a website. You never even know it was an adult family home. We know them. We know the caregivers. We have seen the last state survey from the last time the state was in inspecting them. We can see if there have been any investigations or civil fines for violations, things that a lot of people don't know about. We're going to help you find the place. We're going to cut through the hundreds or thousands of options and get you just a handful that are going to be a good fit for your needs.
Well, so speaking of places, which one's the best place in the area?
I get asked that question a lot. And the question is, what's best for you, right? So there are some places that are really, really good for memory care, right? Well, if you don't need memory care, that's a lousy place for you.
Yeah.
So it really depends on what your needs are. And that's, again, where we come in. If you're not working with Oasis, there are other agencies out there. The quality ones, the ones that are ethical and have good business practices, are all members of our state industry association, the Association of Senior Referral Professionals of Washington.
So what's the acronym on that?
ASRPWA.org. And you can look at their membership list. We're proudly there. I've been an officer and a board member for 3 full terms. But I just encourage you, if you are going to work with somebody, if you're not sure you want to work with us, check there and you'll definitely be working with an ethical, reputable agency.
Awesome. All right. So let's talk about the signs that somebody might need to consider a retirement community.
Well, as we get older, things just take longer, right? So you might find it takes longer to do your shopping, navigating the aisles, making your list. It takes longer to prepare food, longer to do laundry, longer to clean the bathroom. And pretty soon you just run out of time in the day, right? Your whole day is just consumed with this stuff that has to be done. And then you're even falling behind on that. That's a great time to call us, right? Because the communities that we work with are going to offer at least 1 meal a day. Some of them have 3 meals a day with snacks. So you may be able to reduce or even eliminate the need to go to the grocery store. You'll reduce or eliminate the need to prepare meals or do the cleanup afterwards. All the places we work with include hotel-style housekeeping. So you don't have to scrub the toilet anymore. You don't have to wash the sink and the counter. You don't have to worry about the kitchen. You don't have to change the sheets on your bed anymore. And removing those kinds of drudgery things just frees up time for socialization, making friends and hobbies, things like that.
Yeah, they call it the golden age because you're supposed to just sit back and relax and enjoy it, right?
Well, the people who do just sit back and relax, those are the people who aren't going to live very long. What we want to find is a place that has the socialization so that instead of sitting back, you're getting engaged. So you're making friends, you're getting involved in maybe a philanthropy that your community is working on. You're going out on outings. One community I was at just yesterday, they have an upcoming trip to the Tulip Festival up in Skagit County.
That's coming up, yeah.
Do the people have to drive? No, they have a community bus that's going to take them, give them door-to-door service the whole way. And while they're on the way, they'll be able to talk with friends. I mean, what a great outing that is.
That's awesome. So I just turned 50. Okay. So I mean, kind of like remember when 50 was a big deal. Now to me, 50 is the new 30. But I feel like I might be forgetting something. So what's the difference between just normal aging and dementia? Am I in the realm of dementia yet?
Well, I got to tell you, Dan, the 50s is a ship that's already sailed for me. So, that's gone. But what we do find is, having some memory slips is just normal, right? And that happens more and more as we age. It's okay. Do people need memory care if they're forgetting a lot of things? The answer is no. Memory care really is a term of art in our industry. And it means you're going to have specialized programming that just reduces anxiety. It's simpler, it's not as complex. In memory care, it'll also be a secure facility. So you cannot leave on your own. Now, you can leave it when you're escorted by a family member or somebody like that, but that's just not appropriate for most people if they're just getting a little forgetful. When you go into an assisted living community, people are free to come and go as they like. They may seem pleasantly confused to you or me, but they're safe where they are and they're living with dignity. So if somebody's just having memory issues, that doesn't mean that they need memory care.
I think that's great. That's great. My wife's grandmother ended up eventually in memory care, and there was probably a good 2 years of grandma. I think we already talked about that before she was committed, right? Because it was not like boom all of a sudden, and that's always a bummer. It's always hard on the family. So finding the right care at the right time is really super important. So mom and dad getting I think we kind of talked about this. Do they need it? Maybe, right? Let's go on to this one. Adult family home. What's the difference?
Well, adult family homes have a higher care ratio. So in assisted living, you might see anywhere from, one caregiver serving anywhere from 10 to 20 residents, right? And that's really good for things that can be scheduled. Like if somebody just needs bathing assistance or they need help with compression socks, right? That's something that can be scheduled. You don't need a caregiver assigned one-to-one all day just to do that, right?
Yeah.
So that's a case where assisted living is really good. Adult family homes typically have 6 residents, and during the daytime, they'll have 2 caregivers on staff. So that's really where, you've always got someone there at your beck and call. If you need help getting up, if you need help with toileting, you need help with, all kinds of things, right?
That's a little bit higher level of care, but not quite full-time urgent care or hospice.
Right. And although hospice is a service that can be brought into any of these care settings, so on an outpatient basis, and most of the hospice companies don't have any hospice facility. Like they don't have a place for you to go.
Oh, right, because it's in home care.
Yeah, they're just bringing it to wherever you are, right? They can do that in an adult family home. They can do that in assisted living. They can do that in just a freestanding, anywhere. Right.
So with all of these choices, Rob, and all the kind of thing, how do we verify? How do we know that they're getting really quality care in those private homes?
That's a great question, because you might say, gosh, Bellevue has 130 of these. Who's monitoring this, right?
Right.
The answer is the state has dozens of people who are making surprise inspections on these places all the time. In addition to that, people like me are enlisted as mandated reporters. We are in these places regularly. So you may have 6 residents in there, and 3 of them are receiving physical therapy from a home health company that's sending physical therapists into that adult family home. They're all mandated reporters. So if they're seeing something that's wrong, or residents are unsafe or unclean, or all those things, we're mandated by state law to be reporting that. It'll get investigated by trained investigators very quickly. And the other thing is, even a family member, if you have concerns, you can call the state ombudsman, you can report it to DSHS, Department of Social and Health Services, to investigate. So there's all kinds of ways for just concerned people to raise, if they have a concern, raise it.
Yeah, and I feel like, do I have the right number scrolling across the bottom for you, Rob?
Well, let's see.
I think that's your cell phone. I think I need to switch that.
No, I don't recognize. That could be one of those, our website sometimes throws up a trackable number, and that might be the trackable number.
Let's see. So how do people get a hold of you then?
Well, the best way is to call us. Our main line is 425-526-7111. That's our main line.
Yeah, I thought that I had replaced that, but for some reason it didn't. So if you already called, Rob, I'm glad you stayed to the end, because this is the right number. You could also Google Oasis Senior Advisors. Make sure you're clicking on Oasis Senior Advisors, because these people will put whatever thing in. Rob, thank you so much for coming on the show. I really enjoyed our conversation. It's been a while. We hope to get you back on, and we can kind of get a little more specific on some of the other stuff. So thanks again for coming on.
Thank you. Really appreciate what you do for the community, Dan.
Yeah, you bet. So that is concluding our show. I hope you all enjoyed it. If you or anybody has a local business that you want to shout from the mountaintop, we support local businesses and we want to have you on the show. This was a little bit longer podcast than we're used to, but that content that Tucker and I talked about, bring you back on. Tucker, thanks for coming on. Appreciate having you. What are you doing this weekend?
So busy weekend, playing golf Saturday morning at Washington National.
Yeah.
And then I'm doing the Cherry Blossom run on Sunday at UW.
So now's the time to go check out those cherry blossoms on UW campus. It's fantastic. They're in the shape of a W. Let's see. I was going to go W.
Go Dogs.
Go Dogs. Everybody have a wonderful, fantastic, safe weekend.